Yes. What's going on, family? What is up, guys? What is going on? Welcome back to another stream, another session with your boy Abel. Super excited to be here with every single one of you guys as usual. And as people start to actually come into the stream, into the chat, for everybody that can hear my voice, for anybody that's listening to me right now, go ahead and drop your locations in the chat, guys, because we have a freaking lot to talk about tonight, because there was a lot of interesting data, interesting information that was actually released earlier and throughout the entire day. And I feel like we have to talk about it because it's extremely important, guys, for us to be aware and be up to par with any type of data and any type of news that gets released. I cannot stress this enough, and I've been talking to you guys about this ever since I started streaming. The importance, guys, of understanding fundamentals, and more importantly, understanding sentiment behind the fundamentals, right? And today was a day that actually had a lot of different data that was released, and we can see how the sentiment overall pretty much was playing out, and that's what we're going to talk about today, so that we're all up to par, so we're all aware, so that we can also go ahead and go into tonight, London session tonight, New York session tomorrow morning, and just be as prepared as possible for, you know, those trading opportunities, guys, right? So overall, like I said, I'm super excited to be here with every single one of y'all tonight. Let's see who we got. We got the boy Skag in the building. What's going on, my brother? I appreciate you. We got Vermont in the house, right? We got Yusuf from Phoenix. What is going on? We got Savage Land tapping in. What's going on, Savage? I appreciate you. We got Yonkers, New York, Baltimore, Maryland, the 410. My guy Tony. What's good, Tony? How are you doing? We got C Baker in the building. What's going on? LA in the house. Good to see you, Melody. As usual, I know you're always going to show up. It's absolutely amazing to see you consistently show up, and I appreciate you for that. Right, we got the boy Winston in the building. What's going on, Winston? Good to see you. We got Southside Chicago. We got Miami, Illinois, Guyana in the house as well. Welcome to every single one of y'all that is tuning in with me tonight. We got Salson in the building as well. We got DC in the house. Shout out to you, Oscar. What's going on, my brother? I appreciate you for tuning in tonight. And like I said, man, we got a lot of data that we have to cover, a lot of information that we have to go over, so that again we are prepared, guys, for overall, you know, what the markets could possibly do moving forward after this hectic day that we actually experienced today, right? So I see we got Jamie from Cyprus. What's going on, Jamie? Good to see you. How are you doing? Right, love your fundamental analysis and aspects. I appreciate that, Sahil. Thank you so much for tuning in. Right, I appreciate you a lot. I appreciate every single one of y'all guys that's hearing my voice right now. Every single one of y'all that's rocking with me. I literally do this for you guys at the end of the day, right? I just want to be somebody that you guys can come to, a channel that you guys can come to here on YouTube, and come with the intentions, or come with the fact that you know you're going to learn something valuable, right? It's not going to be no just BS random things. This is actually going to be real, raw, valuable content that you guys can take, and you guys can actually start implementing, guys, in your trading strategy, in your way of trading, and hopefully it does give you guys a little bit of a better edge in the market overall. Right, let's see. We got Dallas, Texas in the house, Mississippi. We got the boy Bert in the building. What's going on, Bert? Good to see you. Shout out to all my Baltimore family in the building. I appreciate y'all. I promise y'all, right, when football season starts, we all going to catch a game. All right, because I am a Baltimore Ravens fan, die hard. Ever since I started liking football, I became a B-More fan, right? So I'm definitely going to be out there with my Baltimore familia. We're going to go ahead and catch a game together and just, pretty much have a dope vibe. So that's going to be absolutely amazing, right? So I see we got Suriname in the building, Nigeria in the house as well. Welcome, family. I appreciate y'all. Now let's go ahead and really get started, guys, with what we got to talk about, right? So we had a lot of data that was actually released throughout the day, a lot of major data that was released, guys, and we're going to start off pretty much from the top, just because it's very important to start from the top, right? So we actually had pound news, guys. We had GDP data get released for the pound overall, and it actually wasn't too bad, right? It actually shown, guys, that GDP overall actually went up, right? It was forecast to come out at 2.7% year over year. The previous month it came out at 3.7%, and the actual was actually at 3.5, right? So it actually did come out higher than what was forecasted, but still technically lower than the previous month, right? So this in itself, guys, can be looked at as more so like, maybe, I'm not going to say a wash, but it is a little bit of mixed data, right? Because the fact that it actually did beat projections, that could typically be looked at as something that's good for the economy, right? But the fact that it still came out lower than the previous data, that in itself is also showing that GDP is starting to decline. And if we're being honest, guys, GDP, again, which is something that measures, right, overall growth in an economy, very simple way of explaining it, we should expect this number, guys, to overall continue to tick lower, right? Because right now we all know that the central banks across the world, these economies across the world, guys, are pretty much all fighting the same exact battle, which is inflation. And one way that they're doing that is by increasing interest rates. And typically, guys, whenever we see an increase in interest rates, that would normally correlate to GDP actually decreasing, right? Because what causes GDP to come out at a high level, right? What plays a big part in GDP actually, right? And GDP stands for the gross domestic product, right? It's a measure to really pretty much correlate or identify how strong an economy is doing. So when we're looking at GDP, guys, right, and we see that GDP is high, what is one of the major factors that, pretty much adds into GDP coming out higher, right? It's consumer spending, right? Consumer spending, guys, is what absolutely is one of the factors that absolutely drives GDP. Now, if interest rates are going up, and because of interest rates going up, the point of interest rates to go up, or the reason why central banks are doing that, is because they want to see the consumers to stop spending, right? It's kind of crazy, right? So we're seeing GDP numbers, which again is one factor that drives it, is consumer spending. Right now, interest rates are going up across the board from every central bank because they want consumers to stop spending. So if we do see that actually happen, which we should expect, then again, eventually, guys, we should start to see these GDP numbers start to go lower and lower, right? Employment is another one, right? Employment is another one of those factors that definitely makes up into GDP. But for this aspect, we're talking about consumer spending, right? Because consumer spending right now is the one thing that a lot of these central banks want to see people slow down on. Because as long as people are still spending money all the time, and as long as we still see, consumers spending, guys, then it's going to be very hard to get inflation under control. Because consumer spending, putting money into circulation, putting money into the economy, is going to keep the economy propped up. It's going to keep these prices going higher as well. And these are things that we just have to be aware of. So the fact that this GDP for the pound actually came out higher than predicted is pretty interesting, right? But I do believe, guys, moving forward, we should start to see this number like next month or next GDP reading. We should start to see this number actually go ahead and continue going lower and lower and lower and lower, right? And it's not just for the economy over there in the UK, excuse me, but that's also this economy over here in the US. It's almost every economy across the board, guys, where we should start to see GDP overall start to decline, right? Over here in the US, we're already seeing negative GDP growth, right? Where last quarter we had a negative reading. The first quarter came out negative. This quarter right now, or at least the second quarter, guys, of the year for over here in the US, right? Let me actually bring it up real quick. Let's see, GBP release. Let's see. I'm not gonna be able to find what I'm looking for. Let's see, GDP now. This is what I'm looking for. All right, so as of right now, guys, for quarter 2, it is expected to come out at negative 1.2%. Quarter 1 came out at negative growth. Quarter 2 is expected to come out at negative growth, right? So the US overall is already experiencing negative numbers in terms of growth, right? Eventually, we will start to see the pound in the UK, guys, eventually start to catch up as well, because they're also being very aggressive with fighting inflation as well, with raising interest rates, with tightening overall, tapering overall occurring, all that good stuff, right? So just a very interesting number to see that it still came out at 3.5. Now, you can always do your research and figure out what's driving this number to still come out higher. I'm not going to do it on this stream because it'll take way too long. But overall, that's just something that's very interesting and caught my eye overall, guys. Right now, how did the pound initially react to that actual release? Right, so the pound itself still ended up pretty much becoming bearish right now. It actually released at around 2 a.m. over here in the US. So we've seen an initial little spike up off of that data right here. This candlestick right here, guys, is the actual release, 2 a.m. No, not that one. This candle right here, this bullish candle, is the actual release. Again, it came out at 2 a.m. Shout out to our newest subscriber. What's going on, Sonarto? How are you doing? I appreciate you for tuning in. But again, data came out right here. We seen an initial little release to the upside, a little gain in strength overall, but it really didn't do anything. It did not hold, and I don't expect it to hold, right? I don't expect any of these currencies, at least for right now, guys, to really go ahead and hold its value as much, right? It's just, we can't expect it, right? Because, I mean, the dollar itself is just way too dominant. The dollar is just way too strong. It's just controlling everything. It's absolutely dominating. So it's hard for me to go against what the dollar is doing right now, right? But overall, very interesting to see. You know, we've seen a little initial reaction, but once CPI data actually came out, we've seen that get completely erased, right? So overall, very interesting information, guys. But let's go ahead and keep it pushing, right? So we do have, again, at 8:30 a.m. this morning, guys, we also had CPI data. We had core CPI coming out at 0.7% month over month. It came out higher than what was actually predicted. We also had CPI, regular CPI year over year, come out at 9.1%. This is the big factor right here, right? This is massive, guys, right? Which, I mean, I'm not going to toot my own horn because I'm not going to do that. But who's been telling you guys that inflation is probably going to continue to increase? I have, right? I've been telling you guys every single time we talk about this stuff, which we pretty much talk about all of this information every single stream that we talk about, because it's important, guys, to really be up to date with everything that's getting released. Just being honest, because there's so many different releases that occur, so many different data that can change, so much data that can shift. That's why it's important to be up to date every single day, guys, with these news releases so that you are aware. But yeah, I've been telling you guys that I expect CPI to continue to increase. And even now, I still expect CPI to potentially continue to increase, even possibly on the next CPI reading. Now, this is the thing that we have to understand now. Because of how CPI came out at 9.1%, what should we expect the Federal Reserve to do in their next interest rate decision? This is going to be an interesting one. Now I'm keeping it mushing from this day forward's bars. Right? Let's see. Beautiful day, Noti Gang from Colombo, Sri Lanka. What's going on? Shout out to you guys out there in Sri Lanka. I appreciate y'all. But guys, the question is, right? Because we're seeing inflation still come out higher, CPI data measures inflation, what should we expect the federal, like, it's, I mean, at this point, a 75 basis point rate hike, that's already pretty much being priced into the markets, right? If not, it's already been priced in, because that's already been something that we've been expecting now, even from the last release, right? They already said that they're probably going to do 75 basis point and possibly another one depending on how the CPI came out. So the fact that CPI came out at 9.1% year over year is damn near guaranteed that we're going to do another 75 basis point. But now that also brings up the question. Right? Of if they're actually going to go ahead and be more aggressive and actually raise it 100 basis points or a full 1%. That is actually on the table right now. It is very possible, guys, now based off this data, which again, keep in mind, they had no intentions on wanting to actually raise it a full percent, right? A full 100 basis points. They didn't have no intentions. They didn't even talk about it like that, right? But now, based off the data that we're seeing, we could potentially start to see the market price in the fact that a 100 basis point is actually very possible. Right now, I'm not sure when the actual next CPI data release is actually going to happen. Let me see if I can get that information for you guys right now. Give me 1 second. Let's see. I'm not sure. Yeah, let me actually see. I'm going to get this for you, guys, because I want you guys to be aware of this, right? When's the next release? So August 10th. August 10th is going to be the next CPI release next month, right? Literally in less than a month. Or not CPI, right? That's not what we want to see. Well, that's important too, right? But I want to see the interest rate decision, right? I want to know when the next federal funds rate actually gets released, right? Because that's going to be the big one, right? Because from now until the next federal funds rate, guess what? We can potentially start to see the market really price in 100 basis point hike. And that is very, very important for us as traders, because that's going to give us a heads up on what we should expect the market to continue to do. Okay, now let me go ahead and just see if I can find this for us. All right, so that I'm also aware, because I don't even know when the next release is going to be. Let's see. I want to see when the next one is. And if any of you guys find it before me, right, let me know. Right, let me know. Right. Federal funds rate. Date releases. Let's see. What's going on, my guy George? What's going on, my brother? I appreciate you for tuning in. Definitely always showing love. You've been showing love literally for the past few years. I don't even know how long you've been showing love, my brother, but it's always been a pleasure to be able to come and provide you with some value for sure. All right, so let's see what we got here. Let's see if I could find it. So this is the FOMC meeting. I don't want the FOMC meeting. I want the federal funds rate release. July 27th. It might be July 27th. Let me see. All right, United States Federal Reserve interest rate decision. Yep. Let's see. Nope, I don't want to look at that. I want to see when the next one is. I don't know. I don't want to take up too much time trying to find it. Let's see. Fed interest rate decision. Yeah, so it is July 27th, right? You are 100% right, Chaos and Kyle. I appreciate y'all, right? So it is July 27th, guys. So literally in about 2 weeks. In 2 weeks, we're going to get the next interest rate decision to come out. You have to be aware of the fact that the Federal Reserve over here in the U.S., the central bank, right? The team, the FOMC committee that dictates interest rates, what is their one obligation? Like, what is their one focus right now, guys? Right? I want you guys to answer this in the chat. Right? And for those of you guys that are new to my streams family, just maybe found it on social media or found it on YouTube, you're scrolling on YouTube and you just randomly found, a Forex YouTuber providing value, or hopefully in your mind or in your intentions to provide value. All right, I want you guys to understand that this is very important stuff right here, right? Everything that I'm talking about right now is very, very important. In fact, it's probably more important than what 99% of Forex traders on YouTube actually do, because everybody on YouTube only provides technical analysis, which is probably the easiest part of the whole thing. But when you're able to really interpret this type of fundamental analysis, this type of sauce, this type of value into your analysis with technicals, it will change the game for you. So now the question that I have for you guys, and I see we have 2 people that actually commented, and I appreciate you guys for participating. You guys know I'm all about the participation. I appreciate every single one of you guys that do. But the question that I asked you guys is, what is the main goal for the Federal Reserve over here in the US? I want to see way more answers. I want to see who's actually been paying attention. All right, and if you're getting any type of value right now, family, then I really highly encourage you, if you could, do me a solid, do me a favor, go ahead and smash that like button, because it will just help out, you know, with the YouTube algorithm. It'll help this video pretty much go out to a lot more people. If you guys are commenting on the video, and if you guys are also liking and smashing that like button, it just helps out tremendously. So I appreciate y'all. I appreciate y'all tremendously. Right, we got 100+ viewers on. Let's go ahead and get the likes to match up with the viewers. Right, let's get the likes to match up with the viewers. As a thank you for providing this value. Yeah, for sure. I'll definitely do this all day long. You know what I'm saying? But so yeah, guys, the whole objective of the Federal Reserve, right, is literally just to fight inflation. Like, that's their main focus right now. Right, everything else is irrelevant. Right, the only objective that they have right now is that they want to get inflation under control. They want to manage it. They want to start to see it actually plateau, and they want to start to see inflation come back down to the downside. It's that simple, right? We got JC in the building. What's going on, JC? I appreciate you. Our newest member, our newest sponsor to the actual channel. Make sure to go ahead and send me a message, JC, and I can get you added into a private Telegram that I have created for all of the members of the channel. I appreciate you so much, and hopefully I give you a lot of value as well, right? But definitely go ahead and send me a message on Instagram so I can get you that Telegram link ASAP. Right, but yeah, guys, their whole objective is to fight inflation, right? So if their main objective is to fight inflation, and like really think of yourself as, say you're Jerome Powell, right? Let's put on the hat of the chairman, the chairman of the Federal Reserve, right? And if you're saying in public that your main objective is to fight inflation, but yet all the interest rate hikes that we have seen so far have not done anything for inflation, what is your next course of action? Are you going to continue raising it by 75 basis points, which, again, the last meeting you did it and it didn't do anything? Or are you going to be more aggressive to bring some type of optimism back into the markets? And are you going to say, nope, I'm going to go full 100 basis point, a full 1%, so that we can finally start to get this under control? What would you guys do if you guys were Jerome Powell, family? And again, this is very important, guys, for us to understand as Forex traders, right? This is all the work that we have to do before we even place a trade. We have to understand all this stuff. We have to be aware of what the sentiment can be, right? It's that simple, right? That's why it's important for us to talk about these things and have these conversations, right? So again, if you were Jerome Powell, what would you do? Would you go ahead and raise rates by 75 basis points, or would you raise it by 100 basis points, right? Would you be, going on the path that they're currently wanting to go on, which is at this point being more passive, or are you going to be more aggressive, right? Because if you ask me, right, if I'm Jerome Powell, right, and if I had control of the central bank, which pretty much controls damn near a lot, right, because the central bank has so much power, I'm going a full basis point. I'm going a full 100 basis point. I'm going a full 1%, because at this point, consumer confidence, guys, is absolutely deteriorating. Consumer confidence is actually a measure that actually gets released every so often here on one of these calendars, right? And consumer confidence, guys, is at very, very low levels. It hasn't been at this low of levels in years, right? So if he wants to bring back some type of consumer confidence, and if he wants to bring some type of optimism in the overall economy over in the US, then he has to be very aggressive. Right now, that aggressiveness is gonna still cause, obviously, the stock market to drop. It's gonna still cause the equity markets to drop, because it is what it is, right? You're still raising rates. When you raise rates, you start to promote less spending to occur, because now you're making it harder for people to get access to money. Right now, borrowing is going to be harder. It's going to be more expensive, right? So overall, yeah, we're still going to be seeing a downturn in the overall economy. The fact that he raises it a full 100 basis points is not going to just say, oh man, stock market about to fly again, right? That's not the idea. But what that is doing is that's finally going to bring at least some type of confidence back. And that's also finally going to start to do something to inflation, right? That could finally possibly see inflation finally turn around. And once we see that those numbers, guys, finally start to turn around, that is a period in time where we could possibly start looking for more buying opportunities in the market when we're looking at in terms of equities, in terms of cryptos, in terms of stocks, all those things, right? Because right now, with the state of the market that we're experiencing right now, there's no confidence behind anything. I'm not confident investing into the stock market right now. Why? Because the Federal Reserve continues to drop the ball, right? I'm not comfortable invested into more risk on type of assets because the Federal Reserve can't even admit that they're wrong, right? They can't even admit that they dropped the ball, right? So in order for them to actually bring back some type of confidence to the consumers and to the investors and to the traders, you got to be aggressive, man. You got to come out. You got to be aggressive. You got to show us that you guys got some balls. And then once you do that, then we'll be comfortable. We'll feel a lot more confident and a lot more comfortable with actually going ahead and getting back into the more riskier, quote unquote, riskier plays, right? So that's just my thoughts on that overall, guys. Like I said, we had a lot of information come out, and I believe, I personally believe, if they don't do 100 basis points, then we're going to continue to see a lot of downside for the overall economy, right? I mean, we're already pretty much in a recession. I believe we've been in a recession ever since the start of this month. Right, literally the start of this month, guys, was the end of Q2, the beginning of Q3, and since the end of Q2 happened at the end of this month or at the beginning of this month, then that is pretty much when we actually got into a recession, right? So I already say that we're already in a recession. I don't need to wait till the 27th for the report to confirm it. No, we already know that we are in a recession right now. We know this, right? Like, it's almost a fact, 100% certainty that we are in a recession, right? So now they got to gain confidence back and they got to get us out of this recession. And that's not an easy task, but being a little bit more aggressive and showing that you got some balls will definitely help out tremendously, right? So that's pretty much where we're at in terms of CPI, guys. Now, we also did have the Canadian Bank of Canada interest rate decision as well. Now, look at what they did, right? We're over here talking about us doing 100 basis point, and CAD actually did it. Right, the Canadian dollar, guys, they were looking to increase rates by 0.75%, and they said, nope, we're not going to be like the Federal Reserve over there in the U.S. We're not going to downplay this. We're going to go ahead and raise this sucker a full basis point, right? So overall, because of this, right, this was a beat in projections. Remember, they were only expected to raise 0.75%. They raised it a full percent, right? So that's a reason why, guys, if you look at USD CAD, we actually seen the market pretty much give us a nice little turnover off of that data, right? Like, look at this. This drop right here was literally that 10 o'clock candle, 10 o'clock Eastern Standard Time over here where I stay at. But that's that 10 o'clock candle, guys, where literally the release came out and this thing just absolutely tanked, right? Like, it just absolutely tanked. And that is something that should have been expected, right? The CAD strength should have been expected, right? Because the interest rates came out so high. Remember what I told, and I can't stress this enough, guys, right? Higher interest rates benefits what? Right? What does higher interest rates benefit? What is it going to give strength to, right? Is it going to give strength to the economy over there? And now we're talking about the Canadian dollar. So is this going to be, giving strength to the Canadian economy? How do I spell economy? Right? Or is it going to be giving strength to the Canadian dollar itself? I want you guys to answer this in the chat. Higher interest rates benefits what? Is it going to benefit the economy, or is it going to benefit the currency, family? Right? See, now I know you guys. Now I know a lot of you guys are starting to figure out, like, damn, all right, Abel, now I'm starting to get it. Now I know why data is so important. Now I know why these fundamentals is so important, because it correlates all together. Right, guys, these currency markets are dictated by supply and demand, but the supply and demand of one currency against another one is going to be dictated on the actual data from a fundamental standpoint that's getting released. That's how it ties two and two together. right? So these are things that we have to be aware of, guys. So yeah, higher interest rates benefits the currency. It's not going to benefit the economy. And when I say the economy, guys, you have to think about the stock market, right? The equities markets, the asset market, however you want to call it, right? Anything that's considered more riskier plays, which the stock market is considered a riskier play, that is going to classify under when I say economy, right? So overall, higher interest rates should mean a decrease in the economy, but an increase in the actual currency, right? So the fact that we've seen a full basis point hike is the reason why we've seen this drop. Because when we see this drop, what does that actually tell us? Answer that in the chat, guys, right? Again, I'm asking you guys a lot of questions today because I want to make sure we're all on the same page here. Let me know in the chat, guys, right? Let me know. All right, let me know. All right, yeah, it was definitely a supply zone for sure, right? But what is this telling us in terms of currencies, right? One against the other, right? In terms of currency pairs, right? Remember, we're trading USD, CAD, right? What is that telling us, right? That is telling us that the Canadian dollar was stronger against the USD. Now, there's not that many times where we could say that, right? But for the CAD, there has been periods and times because, again, obviously, you know, its correlation with oil and things like that. We have seen times where the Canadian dollar was absolutely stronger than the USD, right? But, yeah, that's telling us, guys, that the Canadian dollar was stronger against the USD. That's why we've seen the market drop. Now, the question that we have next, since we're talking on CAD, right, and we're going to get into a lot of these pairs, you know, as we go on throughout this stream. But the question that I know a lot of us is probably thinking, all right, Abel, that sounds good, bro, but what's next? Like, what can we expect next, right? Well, me personally, I'm not going against Daddy Dollar, right? Like, I am not going against Daddy Dollar. The dollar has just been so dominant. It has been completely just dominating the whole thing. Right, and I'm not going to be going against that, right? I really don't want to. Like, even last week, I think it might have been even yesterday, guys, I was telling y'all that we could see maybe a short-term drop, and we might still see that. But overall, like, I'm still very much interested in seeing if we do come down to this demand zone right here, which, again, I'm on the daily time frame right now. As you guys notice, if you guys don't, just keep in mind, guys, like, if you notice, anytime I really start to do an analysis, I always go to the bigger picture. I always go down to the daily or up to the daily time frame, and then I work my way down, right? Top down analysis, right? But I will be interested to see if the market can get into this demand zone, and then in that demand zone, I want to see the market rebound and continue higher, right? Again, I just feel like the dollar is just a lot more attractive to hold, right? Even though, and it's something we have to keep in mind as well, even though right now, guys, the interest rate for the CAD is technically higher than the USD, right? Which, again, if we also understand interest rate differentials, then you should also understand why there could be a chance for the CAD to actually continue its strength over the actual dollar, because now their interest rate is technically higher. And when your interest rate is higher as a country, when you actually are offering a higher interest rate, you are also offering a higher yield, a higher return on any money that you actually go ahead and position over there. So that's something that we have to keep in mind as well, right? Which is why, you know, I wouldn't be surprised if we did see the market drop, right? But I don't think it's going to be something that lasts a long time, right? Again, I'm looking for the market to come down, right down into these areas down here, down into this level of demand, and then from there, guys, I'm very, very interested in looking for some long opportunities for USD CAD, right? So that means, what does that mean going into tonight? Going into tonight, there is a good chance that we actually see this market end up dropping. I would love to see this market actually drop, guys. Go ahead and really break and close below these lows, these equal lows that we have here. Anytime we do have an area of equal lows like this right here, right, where literally it's like this second low down here, guys, it did not even break at all, right? So that means, to me, the way I interpret it and the way anybody that's really understands smart money concepts interprets it, that's going to mean that there's probably a pocket of liquidity, or a pool of liquidity that's going to be positioned down below these lows. So the fact that we have these equal lows, the fact that we did see a strong break of structure, we've seen the pullback, there could be a chance for price to actually go ahead and really turn around and go lower from these areas that we're at now. But again, overall, guys, the bigger picture for me is to eventually look for some buying opportunity, and that's going to happen down here at these areas. I'm going to start looking for buys at around the 1.287 level. Right, so overall, how you decide to play this is up to you. If you want to look for the sells, that's up to you. If you want to just wait for the buys, that is totally up to you, right? I'm not here telling you guys what to do. I'm just giving you guys my opinions on what I think the market could possibly actually end up doing. But overall, I would not be surprised if by the morning time we actually see price pushing to break these lows right here. It just makes sense logically, right? From me perspective, it makes sense logically. Right, so that's USD CAD, guys. So very interesting. Again, that was based off the release, pretty much just looking into it and seeing what we're actually dealing with overall. Right, so that's pretty much what we got. Now, again, keep in mind, guys, tomorrow we also do have some data. We have some initial jobless claims coming out, which comes out almost every single week. But then we also do have PPI data that also is going to come out. And PPI, guys, is another form. It's another way to measure inflation, right? But it measures inflation from more of a producer standpoint, right? So this is going to be talking about like the change in the price of goods that is costing people to actually run businesses. So that's something that we have to be mindful of. But yeah, tomorrow morning, guys, we do have some more data that is getting released that can also go ahead and continue to give us insight on how strong or how weak the economy is coming. Now, looking at this initial jobless claims, which is pretty much measures the number of individuals who file for unemployment. Again, I'm expecting this to possibly continue to increase. Now, again, keep in mind, this is a release that happens almost every single week. So, there are going to be periods and times, guys, where we do probably see this number, decrease. But because of everything that we've been talking about, because of inflation, because of, businesses now having to pretty much do something to tighten up or at least gain back from the money that they're losing because of all these factors that we're dealing with rising rates and inflation and all that stuff. A big way to do that is by actually firing people, right? A big way to actually go ahead and fatten up your profit sheet is by letting people go, right? So this is something we have to be mindful of, guys. So I believe we're going to continue to see this number just continue to go higher. We should see more and more people continue to file for unemployment. Unfortunately, it is a bad thing. It does suck, right, that people are losing their jobs and stuff, but this is stuff that we have to be aware of so that we're able to position ourselves as well. But that's pretty much the data and the news that we have for today and that we have for tomorrow. Let me just see what we have on Friday, see if there's anything major. And on Friday, we just have retail sales and core retail sales as well, which again is very important as well. But overall, that's pretty much what we're looking at, guys, in terms of news and in terms of data. Now let's go ahead and take a look at what the dollar is doing, right, and see what we got overall happening and what we could expect overall, guys. So for the most part, the previous 2 days really didn't do much, right? We pretty much just went sideways, really didn't do much to all, just very, very choppy. But because of data, because of the actual release, because of CPI, we seen an initial strength, right? Initial dollar strength come in, and then ultimately we seen it pretty much get erased with this initial sell-off. But then look what the market did. It pretty much rebounded once again, and now we're actually starting to look more bullish once again. So when things like this occurs, guys, when we see just this whiplashing occur, typically this is happening pretty much just to liquidate a ton of traders out of the markets, right? We're talking about we've seen this whiplash occur, and this is disgusting, right? But overall, I do believe we still have a lot more upside, guys, for the dollar itself. So if we see the market, and this is literally where I'm going to be looking for the market to actually go ahead and turn around at, right? If we're able to see price come back down to around this 108 level, around this 108 level, guys, where I believe we could see the market really rebound and continue its dominance. Now, is it possible for it to just continue from where it's at now? Of course it is, right? The market's going to do what it has to do. We have no control over what the market decides to do. That's out of our control, right? So we don't focus on that too much. What we do focus on is finding our areas that we're interested in, seeing the market react from, and then we play it. If the market just shoots up from this level, then it is what it is, right? We can still play it as well. All right, so overall, not too bad, right? So that's just a quick outlook, guys, on the dollar itself. I'm still very much bullish. I believe we're still going to see more momentum to the upside. So that's pretty much how I will be playing it overall. Now, going into the actual currency pairs that we can actually trade, because I don't actually trade the dollar index. I just use it as a reference, as a guide to really help me out overall. But now we're looking at actual currency pairs that we can actually trade, guys. And overall, Euro USD is definitely going to be a very juicy one that I'm going to be looking at for sure, right? And for those guys that didn't know, guys, Euro USD does the exact opposite of the dollar index. Like, I'm talking about a split image, a mirror. Like, it's like two twins, right? Two twins that were two Siamese twins, right, that came out at birth, or they're super identical. Same thing with the dollar index and the euro. They're pretty much identical. They just move in different directions, right? But overall, similar concept. The euro, I believe we can see the market actually go ahead and rebound right here, at least push us back up. And then overall, guys, I want to see more continuations lower. So going into tonight, going into tomorrow morning, I'm expecting 1 euro to cost less than 1 USD. Because right now, the euro and the dollar at a parity, right? They're at parity right now, right? Where 1 euro is equivalent to 1 US dollar, which hasn't happened, guys, in what, 20 years? Right? We haven't seen the euro be at parity with the US dollar in, 20 years, right? So back in 2002, 2003 was the last time that we actually seen this happening. Right now, I believe we're going to see a lot more downside. We're also going to see a lot more bearishness to continue to come in for the euro USD. So overall, guys, hopefully by tonight, by tomorrow, who knows, by next week, I believe that 1 euro is going to be costing less than 1 actual US dollar, and that hasn't happened in almost 2 decades, right? So overall, that's going to be interesting, but this is what I'm looking for. I would love to see price push back up. If we're able to come up to this 1.007 level, then that's really where I'm going to be looking for some shorting opportunities, as you guys can see by my actual profit loss thingy right here, right? This what is this thing called? Right, long position, short position tool, right? And yeah, guess how I'm going to be doing it? Very simple. 2% risk. All right, 2% is going to be my risk. Never risking no more than 2% ever. All right, I don't care how good the setup looks. I don't care what I'm thinking. I don't care what my emotions is like. I don't care about none of that, right? Never risking more than 2% risk. And I want to be going for around 7% gains, because this is a 3.74 to 1 risk to reward. So I don't know about y'all, but this is juicy, right? Risking 2% to go for 7%. I'm doing that every single chance that I get. I'm doing that no questions asked. I'm doing that every single day of the week, including Saturdays, because I'll trade cryptos as well if it gives me this type of opportunity. Okay, but this is what I'm looking for. Now, guess what? What happens if we take a loss? What do? We shake it off. Who cares? It's irrelevant. Right? If you take a loss and you followed your rules, then don't worry about it too much. If I take a loss on this setup, guys, guess what I'm going to do? I'm going to enjoy my day like I've always been. Right? I'm going to enjoy my day every single chance, because, again, I followed my rules. As long as we follow our rules to the T and we do not over leverage, the loss is the last thing that you need to focus on. Because when you focus on that loss that you just took is going to dictate what you do next. And then you losing that trade is going to influence you into getting emotional. And then that's going to lead to more losing trades. So if you take a loss, but you followed your rules, you didn't over leverage, you got in where you wanted to, your stop loss is in the correct spot, then who cares about the loss? Move past it as soon as possible and get back in the game. Think logically and you'll be good to go, right? So overall, like I said, I really don't care about losses, guys. That's one thing you guys are going to learn about me, especially if you're newer to my streams. I don't care about losses. It happens, right? Every single trader in this world experiences losses. I'm just one of the traders where I'm very open to it. Why? Because I want to be relatable to you guys. I'm not going to act like I'm a trader on this platform that never freaking loses, right? Which 99% of people on this platform do. They act like they never lose and they only show their wins. No. Right, we're going to be real here. We're going to keep it real. We're going to keep it transparent on this channel. We're going to be very authentic on this channel. So all the wins and all the losses, we're going to speak about every single one, no matter what. That's just me, right? And I hope you guys appreciate that type of transparency. That's what I provide, right? But overall, guys, this does look good. All right, a sell up here at around 1.007 looks pretty juicy. All right, let's see what else we got here. Do that gap mean anything, right? I know you're talking about the dollar itself. The gap itself just shows that, I mean, at this point, this is just literally when I think the market opened back up here for the dollar itself. But overall, you know, when I first started trading 7.5 years ago, I was always told and I was always taught that whenever we see a gap in the markets, that you always have to expect it to be filled, right? And yeah, that does make sense, you know, in a way, because you know, this type of momentum that caused the gap, this shows that there was an imbalance in the market right here, right? There was an imbalance between the buyers and the sellers. And typically when we have an imbalance between the buyers and the sellers, usually the market likes to go ahead and correct it just to balance it out, close the gap, and then we see the market go ahead and continue in the direction that we might expect, right? So overall, yeah, that makes sense. But I don't focus on the gap too much. Right, I don't focus on the gap because I done got screwed and got burnt too many times trying to expect the gap to close. I don't even care about the gaps no more. Right now, I just still act like the gap is not even there. And if I expect the market to pull back down and close it, then so be it. Right? If I expect the market to go ahead and continue without closing a gap, then so be it. Right? So again, yes, technically they are normally going to get filled. But it could take a day to get filled. It could take 10 minutes to get filled. It could take a week to get filled. It could take a month to get filled. Guys, I remember that there was one pair. I can't remember what pair it is now, right? I really can't. But there was a pair that had a gap open for like 10 years. Right? There was a pair that had a gap open for 10 years. Right? So again, yes, it's important. You can utilize it maybe as a clue, but don't get too don't get too caught up on the actual gap nonsense, right? It is what it is. Let's see what else we got here. Let them know why these other group chats don't be taking care of the people. My guy Alex, what's going on, bro? I appreciate you for tuning in. Definitely appreciate you, my brother. You've been rocking for a minute as well, and I appreciate you, man. Let's see what else we got here. Have started taking the funded challenge. My Forex funded, taking 1% rest. That's fine. Yes, that's fine as long as you're doing it. And let's talk about that real quick, right? Because this is big, right? Big shout out to Kayleese. I appreciate you for the $199. Let's go. All right, my guy had fun out here in Miami, moving when. All right, realistically, I'll probably be in Miami sooner than you know, right? Because that's eventually a spot that I actually want to own property in, is Miami, because I do, you know, I got a lot of business partners out there, right? But Miami's a vibe. I loved it. It was a great vibe with my wife and my child, my littlest. And we had a good time overall, right? But I definitely appreciate you for that $199. But let's talk about this real quick, right? So again, if you're going to be doing one of these prop firms, guys, if you want to get funded, right? If you want to get a funded account, whether it's through my Forex fund, whether it's through FTMO, whether it's through any of these other ones that are out there, there's a bunch out there nowadays, right? If you ever want to do that, guys, so let's look at this, right? Let's say we have a $100,000 account for an example. On this account, guys, right, your max risk overall is 10%. Right? So you might have a $100,000 account, but you can only lose 10% before you lose the challenge. How much do you really actually have to play around with, family? Let me know in the chat. Because this is a big reason why most people fail these funded accounts. Is because they look at it and say, man, I got $100,000. Shit, I'm doing my risk management based off that 100K, right? But let's break this down. If you're doing your risk management based off the 100K, right? And let's say you go ahead and you risk 1%, right? 1% of this 100K. You losing 1% of this, and we'll get into that, right? Let me not jump the gun, right? Because there's a lot that I could really give you guys in tips and pointers on how to actually pass these funded accounts. You know, I've done it numerous times. I'm actually still in the process of being on my live account right now. So yeah, I know how to do this, right? But overall, right? Listen to this, right? You have a $100,000 account. On that $100 account, you have, what is this? All right, get out of here. Right? You only can lose 10%. Right? 10%, guys, of 100K is $10,000. So you can realistically only trade with 10K. So when you guys are actually doing your funded account, and I'm using the 100K for an example, it's the same thing for every single one. You can only lose 10% on FTMO and 12% on my Forex funds. So when you're doing your risk management, you want to do your risk management based off the 10K, the 10% that they're giving you. The overall risk to reward, or the overall max risk that they're giving you, is what you want to do your actual risk to reward on. So your 1% that you're trading is not supposed to be on the 100K. That's what they want you to do so that they can go ahead and just continue collecting your money. But you want to do your 1% on the 10K. Okay, I hope this makes sense, guys. So if we're using a $50,000 account, 10% of 50K is 5,000. So base your risk management off of that 5K. If you're doing a $20,000 account, 10% is 2,000. So do your risk management off of that 2K, right? So if you do it that way, then 100% you're going to be in great shape, right? But let's use an example now, right? So we have a $100,000 account and we're trading 1% off that $100,000 account. How much is 1% of 100,000? Right? 1% of 100K is what? $1,000? Right? 1% of 100K is $1,000. Right now, most people are gonna be looking at it and be like, "Oh yeah, that's not too bad. 1%. I'm trading 1%. That's what they say." Right? But guess what? If you only have 10K to actually play with, and on your first trade you take a L and you lost $1,000, that means you only have but so much, guys, but so much wiggle room before you actually end up losing that account. So yeah, you could say that you're trading 1% off the 100K, but you only have 9 chances, 9 losing trades to really take you out the game. That's not that much. That's not that much at all. Right? That's why you don't want to base the 1% off the 100K, off the actual account balance. You want to base the 1%, guys, based on the actual risk, the max risk that they're giving you. Right, Coach Max Daily. Yeah, and that's another thing, right? The max that they give you is overall, right? Like if you lose 10% overall, you're done. But if you lose 5% in one day, you're done, right? You're donezo. That account is gone. You're losing that thing, right? So again, be mindful of this. $100,000 account. If you lose 5% in any given day, you are out. So you can only lose $5,000 on that 100K account, and if you lose 5,000 on 100K, you're out of there. See you later, buddy. Go ahead and recharge up, right? And I sound crazy, but this is really how they play out. So please, if you guys, and I'm all for funded accounts, by the way, right? Big shout out to our newest subscribers. I appreciate y'all, right? I'm all for funded accounts. I actually recommend you guys to actually go ahead and utilize these prop firms to go ahead and get access to a funded account. The reason why I am all for it is because these funded accounts, these prop firms, it actually gives you some type of discipline, right? You can actually learn real discipline, real profitable habits trading these prop firms, as opposed to you depositing $100, $200, and trying to flip that to $1 million. Because when you start off with $100, $200, $300, even $500, you're not going to really try to grow that in a responsible way, because you're not going to be satisfied with the amount of money you're going to be making if you're following proper risk management. If you're making 2% gains on a $500 account, that's not going to satisfy you. All right, let's be real here, right? And our emotions is a mother, right? That's the thing that we have to deal with all the time. And we're not going to get excited about making $2 here, $3 there, $4 there, right? So more times than not, people continue to blow their accounts for that reason, because they ended up losing patience. They become greedy. They want to make much quicker results. They want to make much larger results, and then they go ahead and completely blow their account, because now they're trading recklessly. But if you have a prop firm, see, now it's a little bit different, because now you have certain rules, strict rules that you have to abide by, right? You have certain targets that you have to reach, and once you reach those targets, you're done trading. And it's just way better to build structure with you guys, right? It's way better to actually build, some type of discipline. So I encourage you guys to go to my the prop firm route. In fact, I actually have a link down below, guys, in all of my videos, right, for my go-to prop firm, which is my Forex funds, right? My Forex funds, in my opinion, is by far the best. They're the cheapest. They also have the most lenient rules, and they actually pay out, right, which is absolutely a positive, right? So overall, if you want to go ahead and get access to one of these, prop firms, guys, my Forex funds link is right down low in the actual description of this video. Go ahead and get yourself an account. But remember what I just told you guys. Make sure to use proper risk management based off the overall max risk overall. Let's see. I heard a 124 R to R has a 20% chance of having 8 losses in a row. I mean, it's possible for sure, right? It's possible for sure. Right, but let's go ahead and get back, guys, to what we're looking at now. So again, overall, the dollar, don't worry about the gap, but I think we're going to continue going bullish. Right now, another opportunity, guys. This is something that I pretty much gave you guys last night. AUD USD. I did not even touch this. I didn't change this whatsoever in terms of the actual tool. This is literally the same exact one that we actually had last night. And look at how crazy, like, price literally came right up to this level. And again, this is something that we seen last night, right? When we were looking at it last night, it was down here still. And I told you guys I wanted to see price come higher first and then go ahead and end up giving us a sell-off off of this area of supply. Now, price pretty much did just that. It didn't actually reach where my entry was. I did have a pending order for this, and it obviously completely missed it. But I'm still going to be holding that pending order, right? I still believe if we do get a chance to go up there, then I still like the overall continuation to the downside. But price does not have to get up there, right? It really doesn't, right? Price can also come right here to say this area of structure right here where we did see a nice increase of selling pressure. Price can also come into this supply zone and also go ahead and give us a reaction to the downside, right? So overall, this can be an opportunity as well that we can look for, guys, for AUD USD and expect more bearish pressure to come in. So overall, not a bad idea, not a bad opportunity for us to go ahead and get involved. And yeah, I like it. It's not too bad, right, overall. So we'll see what happens with that overall, guys. But that's just, again, an opportunity I pretty much talked to you guys about yesterday. And it pretty much missed my pending order by, what, 3 pips, 4 pips, 5 pips or so. But it is what it is, right? I don't stress about stuff like that. There's always going to be another opportunity to get in, right? So overall, I still expect this thing to continue going lower. I still like the bearishness. So even if we do come all the way back up to here, I'm going to be waiting with my pending order to go ahead and get involved. So AUD USD, guys, does look pretty juicy. Very simple. Again, just to really break down, because I know I just gave you guys that really quickly. But, I mean, the overall bias here, guys, looking at the 4 hour, has been still bearish. You know, we have been extremely, extremely bearish overall. And the market just doesn't show any signs of slowing down, right? Especially when we're in risk-off type sentiment. There's no reason to try to go against it just yet, right? Like, at all. There's no evidence here, guys, from a fundamental perspective. There's no evidence stating that the Aussie is going to gain strength. From a technical perspective, there's nothing here saying that the Aussie is going to go ahead and gain strength against the dollar. So overall, the most logical play is probably just to look for continuations to the downside. And that's what I want to do. I want to stay with the path of least resistance. The path of least resistance is definitely this continuation lower. Now, if we actually end up, for whatever reason, breaking to the upside, and we break this high up here, then at that point we might have evidence for an actual correction. But until that actually happens, overall, I'm going to be staying with what I like to see, and I like to see this overall more so continuation. Right, so that's GBPUSD, guys. Definitely looks pretty interesting overall for sure. Let's go take a look at USD CAD. Again, we pretty much spoke about USD CAD already. I would like to see this thing come down into this demand zone, and then from this demand zone, I would love to see the market go ahead and rebound and bring us right back higher, right? So very quick, straight to the point with USD CAD. Sell off from here, going into a bigger buy is probably going to be my favorite opportunity here for USD CAD. Let's go take a look at USD Swiss and see what we got here. All right, USD Swiss has been obviously just on a tear to the upside. I do believe we are going to continue to see this thing actually increase in value, increase in momentum. I would just like to see, guys, if pricing come back down to, say, around this area of structure down here, right, this 0.97 level. If we could see price for USD Swiss come back down into here, that's where I would really be comfortable, guys, looking for some more opportunities to go ahead and go long. Right, especially target back up to this area of supply that we have up here, where we clearly seen a lot of selling pressure come into play. But I would love to see that actually happen, right? So overall, though, I'm not interested in it until we come down to around the 0.97 level. In that 0.97 range, that's where I would start to look for some buying opportunities, guys, for USD Swiss for sure. All right, and it does look good. You know, if we look to the left and we use structure to help us identify a key area, you know, we do have levels of structure in this area right here, right, where we clearly seen price act as both, you know, support and resistance, guys, numerous times right here in this level, right? So if it acted like that in the past, then there's also a good chance where we can continue to see that act like that again. So if we are able to see price come into this 0.97 level, then that's a big reason why I would like to see the market go ahead and possibly rebound and at least head higher. Right, so that's USD Swiss. Let's go take a look at USD JPY, UJ. Right, again, similar thing, guys, from yesterday. You know, I really wanted to see UJ come down into this demand zone. Again, I did have another buy limit down there at that demand zone, hoping that price, obviously we don't trade off hope, but you know, it was a really good setup. You know, I expected the dollar to actually continue to increase, and it did just that. It just literally did not actually reach where I wanted to get in at. So we pretty much missed by almost 10 pips or so, maybe 12 pips. And again, it's one of those other things that's just very unfortunate, but it is what it is. I'm not going to stress. I realistically should have looked for re-entries right down here, right? We had the initial news spike. We had the market pull back down. And I should have been looking for re-entries right here. And no, I didn't get in, right? I should have been looking for re-entries right here because, I mean, obviously I expected a continuation. But, you know, I didn't. You know, it is what it is. But overall, guys, I expect more continuations, right? I expect more continuations for UJ. It's just a matter of now waiting for the market to see if we can pull back, right? One thing that I do not like doing is buying when the market is just now creating highs, right? Because now we're getting into premium territory, right? If I want to buy an asset, are you guys with me? Drop some threes in the chat if you guys can hear me. Drop some threes in the chat if you guys can still hear me. All right, because my OBS just dropped for like 10 seconds. All right, perfect. All right, perfect. So, again, are we in premium price levels right now? If we wanted to buy USD JPY, right, should we be buying it at a premium price level all the way up here, right? When price is trading above highs, that's premium. Or should we wait for price to give us more of a discounted opportunity? Kind of breaking up on my end. That's not good. Yeah, discounted opportunity, guys, right? And so again, I have no interest in trying to chase this. This is too expensive for me. I don't want to buy at this type of price point. Why? Because if I get caught buying up here, and whatever price does, if price starts dropping to the downside, now guess what? I'm going to end up probably having to put my stop loss here or somewhere here. And that's going to be me selling at a discount. I don't want to sell at a discount. If I buy up here and I get stopped out, that is you selling that asset back to the markets. So if I buy up here and the market drops and stops me out, then that's going to force me to sell at a discount. I don't want to sell at no discount. So guys, we have to be mindful of that, right? Premium and discounted price levels are extremely important. Wait for the market to pull back down. And then from there, we can look at an opportunity to go ahead and go long. I really like this level right here, guys, that I'm looking at, this 137.4 level. If we can come back down to this 137.4, then that's going to be an area that I'm very, very interested in looking for some longs from. Now, if that level doesn't hold for whatever reason, because you know the market going to do what it wants to do, right? And we continue, then I'm going to be looking at this demand zone to pretty much come through once again, right? But overall, I like that 137.4 level. That's an area, guys, that I would definitely be looking for some opportunities to go ahead and go long on the UJ, right? So something like this is what I'll be looking for. And then go ahead and ride this thing back up to create new highs, right? Something like that, right? Not a bad play. It looks pretty juicy. So if we can see it, then that would be absolutely amazing, right? But that's my thoughts on UJ. Not interested up here. We come lower, I'll definitely be buying that up. Let's go take a look at GJ, right? Again, GJ was another one that pretty much didn't come to our area. That happened a lot this week, guys, where I had my setups waiting. I had my pending orders waiting. And the market just doesn't come and get it. Right, you know, it is what it is. I wanted to see price come down to this level down here, right, in this demand zone, and then go ahead and start flying, right, down right in here in this level. Bam, right down in here. All right, this is really where I wanted to see the market come to. But again, it's just another one of those opportunities where it just didn't give me that option, all right? And then it ended up just taking off. But overall, guys, I would like to see the market still continue its way to the upside, right? I'm still very much bullish this opportunity for sure for GJ. It's just now a matter of just trying to get in at the right level, right? At where we can actually see price possibly turn around at. And for me, I really like this area down here, right? This 163.2 level, 163.3. If we can see price come back down into this level, because again, I'm not going to be chasing this. This thing is already moving. There's no point in me chasing, right? But if price comes back down into this demand zone, that would be a good opportunity to go ahead and get involved, right? Because right now, we seen last time we really seen a nice little increase in momentum was down at this level, looking at these candlesticks, right? Broke structure after this little pullback that we were experiencing. We found this little low, and then the market gave us a nice strong reaction. So that's showing us, guys, that there is demand at this price point, and we want to get in where the demand is being shown, right? So if we can see the price come down into this demand zone, then that's really where I want to see or expect a possible reaction from that. So overall, we had our initial setup that we were looking for, didn't end up playing out because price didn't actually reach it. But if we're able to see price come back down into this level, see, then that might be interesting, right? Then we might actually be able to go ahead and take advantage of this opportunity. And this one alone, I mean, simply just targeting back up to the highs, we're talking about a 3-to-1 risk to reward, which is very, very juicy. So overall, this is definitely not a bad opportunity, guys. I'm going to be keeping my eyes on. If we can come back down here, 163,300, I'll definitely be going ahead and looking for some opportunities to go to the upside overall. Let's see, please, how many USD pairs should one have as open positions, right? That's a good question. Now, it really doesn't matter what pair, right? Whether it's USD pair, whether it's cross pairs, major pairs, minor pairs, it really doesn't matter. That really just comes down to your overall rules in terms of your overall risk exposure. How much are you going to have your account risk to loss, or how much exposure are you going to have your account open to at any given time? For me, my rule on that is I don't have my account open or exposed to no more than 5%. 5% is the most. So if I have 3 trades open, then 2 of those trades are going to be at 2% and 1 trade will be at 1%. Because if I lose on all 3 of those trades, the most that I'm comfortable with losing is 5% off of one of those trades. But that also goes into my daily max rule too, right? Like if I lose 5% in one given day, then I'm also pretty much cutting it. I'm cutting it quits. I'm calling it quits for that day, right? I'm out the markets for the rest of that day. You know, and again, these are just things, guys, that we all have to really, really understand and get in the habit of doing it. This is very important, right? And I'm glad that you actually brought up that question, because this is very important. Again, my overall exposure, my overall daily risk is 5%, but my overall exposure as well is 5%. So if I have 5 trades open, then you have to, at least for me, I'm only going to be risking 1% on each of those trades, because I have to stay within my overall rules. So I highly recommend you guys to create your own rules on that, on overall risk exposure. Create your own rules on your daily max risk. If you lose that amount, then make sure you call it quits for the day and just be disciplined to it, right? Be disciplined to it. Okay, let's see, what moving average are you using? So this is the 50 period moving average, right? This is the 50 period moving average right here. Can we look at GU? Of course, right? We already looked at, did we look at GU? Oh no, we didn't. All right, I actually skipped GU for some reason. But sure, let's go ahead and look at GU now, right? Now, again, GU is another one, guys. I actually sent out a few ideas via my Telegram earlier today. And if you guys are not in my Telegram family, again, I highly recommend you guys to go ahead and be a part of it, because I'd be providing a lot of value in the public Telegram. It's just a channel, so only I can actually write in it. But I do go in there and I provide you guys with massive, massive value, right? So I actually ended up creating 2 breakdowns for you guys, right? We had GBPUSD and we had USDJPY breakdowns that I gave out to you guys earlier in the day, pretty much at the beginning of New York session, so that you guys can take advantage of the move as well. And this is another opportunity that we look at, right? But again, that's not it. You know, like I said, I come on here, guys, on my Telegram. If you guys are not in the Telegram, the link is constantly being sent out in the chat, you know, by the bot. So make sure to go ahead and join, be a part of this. But yeah, you know, I'm in here pretty much just providing a lot of value. We spoke about CPI, it coming out. All right, gave you guys a few little graphics. It was dope, right? We spoke about a lot of things, guys, right? 7 key takeaways from a high inflation number, right? Price increases over last year. This is actually very interesting to actually see, how all the price of things went up. We're talking about oil went up 98% since last year. Gasoline went up 59.9%. Gas utilities went up 38%. Electricity went up 13%. Food at home 12%. New cars 11%. Transportation went 8%. Food away from home, the cost of even eating out went up 7%. Used cars went up 7%. Shelter went up 5%. Apparel went up 5%. That's just a pretty cool little thing, right? So overall, again, if you're not in the Telegram family, make sure to be in there. It is absolutely saucy for sure. But let's go ahead and talk about GBPUSD. Right now, GBPUSD, guys, did exactly what I expected, but I also did not get in. All right, let's see. You keep on cutting out. It could be because of my mic, right? It could be literally because of my mic itself. Right, but GBPUSD did exactly what I wanted it to. It just, again, it's nuts. It's one of those things, guys, that, again, I did not get filled in, unfortunately. Right? I did not actually get triggered into this trade. And if I'm being very transparent with you guys, I wasn't able to jump in neither when I seen price come to it because I was on my Starbucks run. Right? I was on my Starbucks run. Guys, is the sound good? Can you guys hear me? Yes or no? All right, can you guys hear me? Yes or no, family? Is the sound good? Does it sound good? All right, does it sound good? Because I had a couple people say that their sound was going in and out, right? But let me know if the sound is good. I can hear. Yes. Let me see. Sound is good. Sound is good. I can hear you now. I had to exit and come back on. All right, perfect. All right, so as long as the majority is good. Sound is fine. Screen is blurry. If the screen is blurry, then you want to go ahead and go to your settings and up the quality, right? Because you should be able to get 1080p with this stream for sure. Right, so just up the quality if your screen is blurry. That's not on my end. That's more so on your end. Just go to the settings on the video and then go to the advanced. Yeah, and then go ahead and click on 1080p. All right, so guys, overall, like I said, this was absolutely played out beautifully. Price came up, but it missed me, right? It's another one. Like I said, that happened to me a lot today, guys, where I had 3 opportunities that I pretty much had pending orders waiting, and literally all of them missed by within 10 pips of each. And literally the thing that sucks the most is that normally I'm usually watching these things, right, where I can actually watch it and I could still end up jumping in, ahead of time, even before price actually goes ahead and hits my order. But I was on my Starbucks run. I'm addicted to Starbucks. Every morning I gotta have my my caramel frappuccino every single morning, and at that time I was literally going ahead and grabbing some coffee, so I wasn't on my actual desktop at home to able to just go ahead and jump in. But it is what it is, right? It is what it is, But I do believe, guys, we could see more continuations. Right, so now I want to see, again, we're going to have a couple areas that we could pay attention to. Right, we have this area of supply. Big shout out to Brian Potts. What's going on, my brother? I appreciate you. Welcome to the family. Right, but we can see price either come up to this area of supply right here and then go ahead and shift send us lower, or there's still a chance for price to still come back up to this area that I was very interested in and then go ahead and shift us lower. Right, so overall, I'm still going to be possibly keeping this entry, my original entry, open to see if price can reach that high. Again, I'm really not sure. I honestly don't think it will reach that high, but if it does, I'll be there waiting with a pending order. But what I'm also going to do is possibly keep my eye on this area as well. And if price ends up coming up into this area before I end up falling asleep, then I might end up taking that as well, risking a solid 1% or so, and then just dealing with the outcome overall, right? So overall, though, I do expect, guys, more continuations to the downside for GU. Me personally, right, I'm expecting more continuation to the downside for GU overall. Right, so that's where I'm at with this. More bearishness to come into play. Can we see gold? Yeah, for sure. Let's go take a look at gold now. Right, and gold actually did a very interesting move. Now, again, we got to go to the bigger picture with gold just so that we see where we're actually at. And we're at a very, very strong level right now, guys, for gold. Right, where we could see, again, overall, gold has been absolutely getting destroyed being traded against the dollar. All right, the dollar has been so dominant that even gold doesn't even stand a chance lately. But we are at very, very interesting levels right now, right, where we're seeing price clearly, respecting this level tremendously. And every time price does come to this level, clearly all the traders in the world, they expect gold, or they're looking at gold as being as discounted in this price point, and we continuously see it bought up. So with that being said, I would not be surprised, guys, if we do finally start to see gold actually start to rebound. Right now, there's going to be a way for us to also really see this and identify if it's possible. So overall, we've seen price really get very, very choppy, very, very choppy. Obviously, we had data get released today that sent it much lower, ended up spiking down to the downside. But we've seen a very interesting reaction, a nice rebound, guys, for gold. So with that rebound, is it possible now? Is it possible for gold to actually rebound now and actually come and start targeting these supply zones up here? I mean, it is very possible, right? Again, the market's going to do what it wants to do, right? We don't control that, and I say that a million times because it's important for you to get that into your head. But it is possible, guys. Like, there is a chance for price to literally go ahead, even from where these areas that we're currently testing now for gold. Like, there is a chance for price to actually go ahead and really make a rebound and actually start targeting these areas of supply back to the upside. Big reason for that is because, for one, how price action is playing right now shows that we're showing some type of bullish strength, but we're also showing this type of bullishness really showing in because of probably where we're also trading in. We're in this weekly zone that we're at, this weekly area of structure. So there is a good chance for price to actually go ahead and make its way higher. So what we can do, potentially do, right, what I would like to see, I would like to see price eventually, if we could break this high right here at 1736, if we break that, then I do expect a lot more bullishness for gold, right? Again, it's kind of hard for me to want to buy gold. Just looking at what gold has been doing, has been absolutely getting destroyed pretty much since March. So it is a little bit harder to buy gold, but because of where we're at in terms of structure, I'm actually gaining a little bit more confidence with the opportunity to go ahead and buy it up. Okay, so that's just my thoughts and my opinions, guys, for gold. Just be mindful, though, it has been getting destroyed against the dollar. And, we do have a lot of data that's coming up over the next few weeks. So, just be mindful of that. All right, so that's just my thoughts on gold. I do think that there is a chance for price to go ahead and go higher. All right, so that's gold. Let's see, GU, GJ making the same move. For this instance, what I want to see is I actually want them to do different, right? I want to see GU to actually continue selling off, while I want GJ to actually go ahead and increase in value. Now, I know you're probably thinking that, well, Abel, how is that possible, bro? Like, if 1 pound is going one way, shouldn't the other one go the other way? Not necessarily, right? I expect the pound dollar to drop in value based on the fact that the pound is much weaker against the US dollar right now, right? The dollar is the most dominant currency across the board. It's the most dominant asset, right? So the pound is going to be, in my opinion, continue to be weaker against the dollar. But if we look at GJ, now we're talking about two currencies that are also weak against the dollar. And I just believe that the pound is stronger than the yen, right? Because if we look at GU, right, this is showing us that the pound is weaker against the dollar. If we look at UJ, this is showing us that the yen is weaker against the dollar, right? So when we look at both of those two pairs compared to each other, now it's just a matter of trying to figure out which one is really going to be the most dominant one. I believe that the pound is still going to be more dominant than the actual yen for various reasons, right? For one, from a technical perspective, right, we overall have seen the market genuinely still going up, right? We're still very much bullish here, guys, for GJ, right? We've been seeing a lot of sideways price action lately, a lot of consolidation, a lot of range-bound markets, but that does not defy the fact that we are still technically very much bullish on a technical perspective. From a fundamental perspective, I still expect pound to be stronger than the yen. Why? Because the UK is being much more aggressive with actually fighting inflation. They're already raising interest rates. They're over there going through the tapering process, while the Japanese yen, the Bank of Japan over there, they're doing the exact opposite, right? They're still printing money. They're still doing all this. They're still beating around the bush on how they're going to combat inflation. And because of that, the pound is just going to be a lot more attractive for foreign investors to actually invest into and to hold. So overall, fundamentally and technically, I'm still very much bullish the pound over the yen. But that's how that works, right? It's very possible, guys, for pound dollar to go one way and pound yen to go the opposite way. It's very possible, and I hope that makes sense on how that's possible. All right, let's see what else we got here, right? What it do, Flame? What's going on, V Glove? How are you doing? Shout out to you. Let's see. Hi from Australia. I have just discovered your channel. Can you please tell me what other times that you are live? Asian session suits me well. Well, Brian, you are at the right place at the right time, because I go live at the same exact time every single Tuesday, Wednesday, and Thursday at 10 a.m. Eastern Standard Time, which is, well, right now is 11, or not 10 a.m., 10 p.m. Eastern Standard Time, which right now is 11 p.m. Eastern Standard Time. But yeah, around this time is when I typically go live. In fact, let me actually go ahead and fix something so that I can actually have that on the screen. Give me 1 second, right? Because I do want you guys to be able to see me. Give me 1 second. Let me actually go ahead, and I'm over here moving this around so I could do something real quick. Let me see. I don't want to do it too much. All right, there we go. Live every Tuesday, Wednesday, and Thursday. Let me just make this smaller. Let's see. I don't want it to be too much in the way. All right, we're just gonna keep it at the bottom of the screen. No, I can't keep it there. All right, we're gonna put it over here. All right, this works. This works. We're gonna deal with it right here, guys. All right, yeah, that's fine. All right, so now it's on the screen as well again. So I am going live every Tuesday, Wednesday, Thursday at 10 p.m. Eastern Standard Time. So I look forward to continuing to see every single one of you guys on the call every single time. Okay, because I'm here to provide you guys with massive free value. But overall, guys, like I said, GJ, I would love to see GJ ultimately really come back down. All right, it's like the only way that I would like to actually go ahead and really take advantage of it. If we're able to see price pull back down, up here is way too expensive for me. I'm not going to buy at a premium. I want to expect a discount, so I would like to go ahead and see price come back down there and eventually go ahead and take advantage of that. All right, so let's see what else we got here. GJ, yeah, that's my GJ right there. All right, let's see. That lime green is fire. What made your own color? Yeah, this green is pretty fire. I'm not even gonna lie. Let's see. Perfect breakdown. Good looking. Appreciate you. Why do so many unprofitable traders run red lights? Because they don't know about the stop loss. You are hilarious. You are hilarious, right? But overall, guys, this is pretty much what we're looking at. Let's go take a look at the indices real quick. Now, if you guys were trading the indices, they did exactly what we said they were going to do, right? Like, we've been pretty much catching these indices, guys, all day long, right? We initially called it out last week, right, where I told you guys I wanted to see, S&P come up into this level of supply and then overall end up shifting lower. And then last night I told you guys that I wanted to see price come back up into this level of supply. Price ended up spiking up, and then a crazy sell-off, right? So overall, this is still looking exactly how we like it to. It's doing exactly that we're expecting to, and I still expect, guys, a lot more bearishness to come in. So even if for whatever reason we do see price come back up, I'm still very much interested, guys, in looking for some more shorting opportunities for these indices that we're pretty much looking at right now and that we're pretty much trading. Let me just go ahead and add this real quick. I don't know why it's not on there, but my NAS 100. Right, so overall, they're all going to be very similar, though. Right, I would love to see a rebound in the market. Possibly back up to this area of supply, And then if we see price come up into that area, that's where I'll be very interested in looking for some shorting opportunities, guys, for these indices as well. Right? It's gonna be the same way for every single one. Again, NAS 100, US 30, S&P 500. They're all gonna be very similar reactions, very similar plays. But yeah, a reaction back up to these highs will definitely be a nice, interesting opportunity, guys, for us to go ahead and continue shorting this market overall. Right? So very interesting, looks very juicy, and I like it. Right? I like it overall for sure. Right, let's go take a look at cryptos. Right, see what we got here in terms of the crypto market. Right now, again, just like everything else, one thing about cryptocurrencies, guys, that is literally almost mirroring like the stock market, which is kind of crazy. Right, like it's been moving pretty. I'm not gonna say identical, all right, because obviously it's not identical, but you know, whenever we see negative data come out and we see the stock market react in a bearish manner, we have been seeing the cryptocurrency market react in a similar way as well. So overall, we just got to keep that in mind, guys, if you are going to be trading these cryptocurrencies, that they are very influenced by, obviously, the data that's getting released. So overall, though, what can we expect and what can we see actually happen, guys, for Bitcoin itself and possibly these other cryptocurrencies that we have on the board? Well, overall, we haven't been doing much. We've been pretty much just going sideways, guys, for the past month or so. But overall, I do believe we're going to see possibly a spike in the markets for Bitcoin. Right, we might see price spike up all the way up to around 28,000, 29,000, 30,000 or so. But then overall, I do want to see prices actually go ahead and shift much lower. I'm very much still expecting, guys, price to possibly really come down to around the $15,000 range. Right, maybe, yeah, around $14,000, $15,000 range is really going to be where I believe we could really see the low finally come into play. For these cryptocurrencies, at least for Bitcoin itself. Now we have to just keep in mind, right, the Bitcoin halvening, guys, doesn't come out for another 1.5 to 2 years, right? And since the halvening doesn't get released for another 1 to 2 years, the market isn't really going to do much, right? We're not going to see Bitcoin fly back up to 60,000 anytime soon, right? I personally believe we're not going to get Bitcoin back up to its ultimate highs until probably near the 2024, right? Beginning maybe even near the end of 2024, after the halvening has already taken place and there's been a few months under, you know, a few months that passed after the halvening. But overall, if we're able to see price come down to the $14,000, $15,000 range, and if you guys are not starting to buy cryptocurrencies at that point, then you guys are absolutely asleep, guys, on what cryptocurrencies are and what is actually going to occur. Because Bitcoin will eventually be worth $100,000 one coin. Bitcoin will eventually be worth $500,000 one coin. Bitcoin will eventually be worth, guys, $1 million for one coin sometime in the near future. I'm talking about 10, 15, 20 years from now. Bitcoin will be worth a full $1 million for one full coin. So if you can get in at 15,000 and start buying and buying and buying and just chipping away at getting one full coin, that is probably by far the most important thing that you guys can do. Guaranteed, right? Guaranteed, because again, this financial market that is just now pretty much risen from the death from 12 years ago when it launched, it's not going anywhere. Bitcoin is not going anywhere. Cryptocurrencies are not going anywhere. All right, it's just not. I see investors are taking it seriously. 100% they are. Why do you think you see not just big time corporations, you're seeing hedge funds invest into Bitcoin? Now you're seeing actual countries, right? Countries like El Salvador absolutely buy a lot of Bitcoin as well. So please do not underestimate, guys, the power of these cryptocurrencies. Even though we've seen this massive decline, that's actually expected. I was telling everybody, and again, I'm not no guru, I just use the data that's given to me, right? I was telling everybody that the 69,000 that we've seen is the high of the market. It's been documented on my Facebook, on my Instagram, on my Telegrams. I've been telling everybody that don't be surprised if the 69,000 was the high of the market, because now we have to deal with the overall cryptocurrency cycle. It's the cycle, right? Again, very simple, guys. When you understand the cycle of these cryptocurrencies, you'll be a lot more confident in investing into it, which is why 2023, near the end of 2023, beginning of 2024, that's when you that's like the last point where you can actually go ahead and start really start to scale in. You should start buying it as soon as it reaches 15K. Anything under 20,000, that's buyable for me, right? Under 20K, I'm buying Bitcoin all day long, right? Under 20K, that's a great opportunity to buy Bitcoin, in my opinion, Now, you don't have to buy a full coin. You could buy $25 worth. You could buy $50 worth. You could buy $100 worth. If you buy $20, and this is, again, I really would love to see one of you guys do this. If you start to buy $20 worth of Bitcoin on Cash App or on your favorite, exchange, wherever you want to buy it, if you buy $20 worth of cryptocurrencies today, or at least every single week, once a week, set it on autopilot, $20 by 2024, that $20 investment that you're doing every single week is going to change your life. Like, it's going to change your life. It's going to, right? Because think about it. $20 for the next year and a half, every single week. That is going to add up. Right? So by the time the next bull run occurs, you'll probably have $1,000, $2,000 saved up into Bitcoin. And when the next bull run comes, see, now you're able to go ahead and ride out the wave. Right? And not just that, because you're only going to be able to get so much out of Bitcoin, right? But Bitcoin is the big daddy, right? Bitcoin is, that's like the granddaddy of all crypto. So you want to start off with Bitcoin. But even when you do start to see the market is finally coming back, we're going back into the overall bull run, then you could take that $1,000, $2,000 that you saved up over the past year and a half to 2 years and invest it into various altcoins. Altcoins you're able to get 10x on, 100x returns on, right? So you're able to really flip your money very, very quickly. In fact, 99% of cryptocurrencies, guys, go up during a bull run, right? So 2024, you could pretty much pick any cryptocurrency on the top first 2-3 pages. It is pretty much guaranteed that you're gonna, and again, I know this sounds crazy, and it might not be the best advice to give you guys, but I've literally been watching cryptocurrency now for the past 6-7 years, right? Damn near just as long as I started trading, right? My first Bitcoin, I didn't buy it, but I literally found out about Bitcoin when it was $300-$400 a coin, and I literally seen the waves, and I seen the cycles, so I know this information. And I also know that everything goes up during the bull run. Everything. So take advantage of it. Take advantage of it. Start positioning yourself now. $20 a week. Put it on autopilot. Don't even know that you're doing it. Every single week. $100, $100, and watch by the end of 2024, your life is going to be completely different. I guarantee you. Especially if you make the right investments, you're going to be lit. You're going to be lit. All right, so overall, though, that's pretty much where we're at, guys. So going into tonight, like I said, I'm very interested in looking at EURUSD shorts. GBPUSD, again, it came very close to our entry, but I will be looking for some re-entries if possible. GJ also looks very juicy, guys, if we're able to see this little downturn. If we can see a little downturn in the markets, and I'm very interested in looking for some buys as well on GJ, just down in that demand zone. And yeah, those are going to be like the main ones I'm looking for. EURUSD, GJ are probably going to be my go-tos for tonight. And we'll see exactly how they end up playing out by the morning. All right. So overall, though, family, if you guys are not in my Telegram, make sure to go ahead and be a part of my Telegram. If you guys are not following me on Instagram, please go ahead and follow me on Instagram. Please, please, please be careful, guys, because as soon as you follow me on Instagram, I guarantee you there's going to be a bunch of fake pages that actually come up of me. So please be mindful of what my real Instagram is so you do not get scammed. All right, it is just strictly, it's Abel Melendez, no underscores, no dots. It's literally my full name. It's Abel Melendez, no funny business, guys. So please, please, please go ahead and follow me and follow the real one so you guys know that you're following the real one. And just for that, for anybody that does decide to follow me, I will give you guys a follow right back as well. Just because, again, I like to show love to everybody that's, in the community, right? I consider you guys my community here on YouTube. So anybody that's a part of my community, I want to be able to go ahead and show you guys love and interact with you guys for sure. All right, but overall, though, family, that's going to be it for tonight. I definitely appreciate every single one of you guys for jumping on. If you guys are new to the channel, thank you guys. I appreciate y'all. Hopefully you guys were able to get some value, and I look forward to continuing to give you guys massive value. Last thing I want to go ahead and give you guys a shout out on is about the boot camp, guys. Again, there is literally, again, I said I'm only taking 30 people, but I'm debating on if I should open up more spots, because I'm being honest, right? 13 out of 50 or out of 30 spots already taken for the boot camp, right? For my 5-day boot camp, 13 out of 30 spots are already taken, right? So you only have 17 spots left. So if you really want to take your trading up another level, if you really want to increase your ability to read the markets and understand it from a technical perspective, if you really want to understand fundamentals at a higher level, then please do not sleep on this boot camp, right? I know a lot of people that were in my previous boot camp, my first boot camp, can all attest that the value is out of this world. So if you want to go ahead and really increase your trading ability, and if you want to become better as a trader, become better and ultimately become a profitable trader, then my bootcamp is a must. Make sure to go ahead and fill the form in the bio. I have a form that you have to fill out. It's in the bio of this video. Make sure to go ahead and fill that form out and lock in your spots ASAP. Right, but family, I do appreciate y'all. I love you guys. The boot camp is August 15th through the 19th. August 15th through the 19th. So again, we still have literally a little bit over a month, but spots are locking up pretty quickly. So please make sure to go ahead and lock in your spot if you want to be a part of it. And I know for a fact you will get a lot of value out of that. So family, I appreciate y'all. I love you guys. Thank you guys for everything. And I'll be back on tomorrow. Same time, same place. Let's get it.